What's happening, everybody? Welcome back to another episode. We have FOMO like a mofo. We have not seen this much interest in Bitcoin since 2017. Are we at the cusp, or are we in a bull run? I will tell you that in just a second. Over here, we have the Indian government unclear of what the hell they want to do. First, Bitcoin cryptocurrencies are legal, then they're illegal, then they're legal again, then they're illegal. Back and forth, back and forth. I will let you know what government of India is now saying. Also, we have, of course, the Federal Reserve is planning on printing a bunch more money, and it is inflating the US dollar supply. Guess what? Institutions and big businesses and people are looking for a hedge. I will tell you exactly what's going on, who's buying what, and how that affects the Bitcoin price. At the very end, guys, at the very end, I'm going to share with you a project that has been around for a while. In the past year and a half, it was, in fact, its success before was kind of its downfall because it was fully decentralized, and it was so popular that it couldn't even keep up, and they've been rebuilding and rebranding to a 2.0 version, and this time I think it's going to be insane. They just raised $2.5 million. They are going live, and I think there is massive upside potential. So stick around. I will tell you about that at the very end. Thank you so much, everybody. Please like, subscribe, share with your friends, and I will catch you in a second. All right, first up, we got FOMO. We got massive amounts of FOMO. I mean, you can feel it in the air. It is the highest number of new Bitcoin users since 2017. The number of new users coming into Bitcoin's network is growing quickly. In fact, it has reached its highest level since the bull run of 2017. We have been saying bull run is here. In any case, it is safe to say that volatility is back in the market. And with it, the interest is also increasing. In fact, data from Glassnode shows that the number of unique addresses to appear on Bitcoin's network for the first time are at their highest level since 2017. So these times actually remind me back of, I mean, even in 2014, 15, there was crazy volatility. I mean, it was not uncommon for me to see a price of Bitcoin between, 180. The next week we're at 240, and then we're at like 320. Then we go back down to 150, and it was all over the place. You could see videos I had from. I used to run a lottery called World Super Lotto. It was Bitcoin-based lottery, and you can see in those old videos that every time before I did a drawing, I would refresh timeanddate.com and blockchain.info, so you would get the exact time and date and the price of Bitcoin at that moment, just so you knew I was doing the recording live. And it's crazy to go back and watch those videos and see, when I first started, the price was like at 280 or something, and then, then 6 months later it was at 190, and halfway in between then it went all the way to 500. I mean, and this was just kind of the norm back then. So if you don't know by now, there's going to be massive volatility always in Bitcoin and cryptocurrencies. The lower the market cap, the more volatility there's going to be. That's just the way it works. And Bitcoin, when it gets to a massive mainstream adoption as a world reserve currency, it's going to be pretty stable. But until then, we're going to see volatility, and that's just normal. So I encourage all you guys to hodl and don't stress and trip about the day prices unless you're a day trader. But, it's probably best not to be a day trader unless you want to make that a full-time profession. New BTC addresses surge. According to the popular cryptocurrency analysis, I already read this to you. I read this to you. So check this out. This is Bitcoin interest, new wallets created. Now, this is not always the best representation because I create a new Bitcoin address every single day. So it's hard, not every single day, but often I'll use a new Bitcoin address to receive Bitcoin payments just for obfuscation, just to make it more difficult for on-chain analysis to track, a particular wallet that I have. I'll just create a new wallet and accept Bitcoin to that. And a lot of people do that. Some wallets do that automatically. So it's not the most accurate metric, but I think that they use more than just wallet created in order to get you a figure like this. Anyway, FOMO like a mofo. FOMO like a mofo. Bitcoin and S&P no longer correlated, Maddie Greenspan says. So I did a panel with Maddie. In fact, if you just look like 2 videos ago, you'll see my panel with Ian 𝗏𝗏 and Maddie Greenspan, 𝗨𝘁 𝗬𝗂 from Ghostbusters. And, it was a fun panel. You should check out the video. So, whether it's going to be correlated or not, it's hard to say. Sometimes it looks correlated, sometimes it doesn't. But it is our hope that this decoupling or this uncorrelation slowly decouples. And the reason I'm saying that is because I want to see the US dollar inflate to, it's going to inflate no matter what, right? I'd rather not see it, but it's going to. And that's going to give time for people to see it coming. And that is going to give people time to look for alternative asset classes. And I'll get into a little bit in a second here what they're doing with this time that they're having to research alternative assets investments to hedge against the US dollar inflation. And people are starting to realize, finally, that the stock markets are insanely unrealistic. They just are absolutely absurd. And this is thanks to the Federal Reserve just vomiting, hyperly vomiting US dollars into circulation, just puking it out everywhere massively, like a massive episode of food poisoning or something. Bleh. Things are looking bullish. Greenspan stated in an August 2nd interview that he believed the bull market is back. On July 22nd, Gemini crypto exchange co-founder Tyler Winklevoss stated that in a tweet that the Fed was continuing to set a stage for Bitcoin's next bull run with further stimulus spending. The surge comes amid expectations that the U.S. government will announce a second stimulus package on August 7th. Democratic leaders are pushing for a $3.4 trillion package, while Republicans are advocating for one worth $1 trillion. Okay, maybe they'll settle somewhere in between, but this is so much money, and they're going to have to keep pumping out trillions of dollars a month, or $1 trillion a month plus, in order to keep the market afloat. And I believe that they're going to do this all the way up until the election, and maybe as long as they can, because if you're in government, what the hell do you do if your entire class of citizens doesn't have a job and no money and no food? I mean, you're looking at a really crazy America if that happens. I'm talking about massive civil unrest. You thought the protest for Black Lives Matter was crazy? Wait until you see what happens if we don't start distributing money to everybody. And in order to do that, you need lots of money. Not only that, but the US dollar is becoming less and less attractive. People are not as interested in holding US dollar anymore. They're really looking at gold and alternative asset classes. Bitcoin. 3 ways US Fed printing is fueling huge gold, silver, and Bitcoin rally. Bitcoin's increasing correlation with gold. So what we're seeing here is we are seeing Bitcoin decoupling from the US stock markets, interesting, and coupling with its physical counterpart, gold, right? Because Bitcoin is digital gold and gold is physical gold, and it's starting to really represent that coupling, that representation of it. And people are starting to realize that, hey, maybe this does make sense. What defines gold? It's a finite asset, right? It's something that doesn't have a lot of it in the world, but gold doesn't really have too much utility anymore. Maybe it did before. There's far better precious metals or metals to conduct electricity and things like that than gold, right? So it really is a digital counterpart to gold, but it's got way better properties, right? You can't travel the globe with briefcases full of gold. That shit is heavy. And it's dangerous to go around the world with a bunch of gold on you as well. That is, you're just asking to get robbed at that point, right? But you can travel all the way around the world with a whole bunch of Bitcoin, billions of dollars of Bitcoin in the cloud, basically, and nobody ever knows that you have it. You can travel all around the world with much Bitcoin as you want, right? And that alone makes it amazing. Talk about capital controls. You want to get money out of your country? Well, if you try to do that in gold, you're pressing your luck trying to get that across the border through flights and things like that. But if you're doing that in digital gold, aka Bitcoin, again, super duper easy. If you want to go pay for a coffee in gold, what are you going to do? Take your gold brick and just kind of chip off little bits of it and try to pay for your coffee with that, and then get out your little scale and weigh it out, and then like go, no. All right? But if you want to pay for your coffee in Bitcoin, we could do that. There are a lot of reasons why Bitcoin makes a better thing that gold used to be. It's a better version of it. The declining dollar is a positive catalyst for each asset, right? So this just look at what I said before. The declining dollar, the choice that the Fed has no choice but to print more dollars, thus increasing the circulating supply, thus devaluing the dollar, but not doing it crazy Venezuelan style, is giving time for people to look into alternative classes of investments, including gold, silver, and Bitcoin. Don't know already, back in the day when the DAO was hacked, the Ethereum Foundation made a decision to roll back the blocks and basically reverse the hack. Well, there was a lot of hardcore enthusiasts in the Ethereum community that thought that the blockchain should be immutable and that you shouldn't be able to roll back the clock, basically. And so Ethereum, Vitalik and all his cronies just said, you know what, we're going to roll it back anyway. We're going to reverse the DAO hack, get our money back, and move on with our life. And there's a big group of people that said, no, we don't like that. We're going to keep mining the original chain. And this is when Ethereum Classic spun out. There have been several 51% attacks on Ethereum Classic. What does that mean? That just means that somebody has to basically generate more than 51% of the hash power in order to start writing blocks to the chain, and they can do things like what's called double spending. So a 51% attack that impacted Ethereum Classic is believed to have resulted in approximately $5.6 million worth of cryptocurrency being double spent. The report estimates the hacker reaped more than 2,800% return for his efforts, having spent nearly 17.5 Bitcoin worth $192,000 on renting hash power from NiceCash to execute the attack. They said it was a sophisticated double spend. So one of the reasons I decided to share this with you guys is because you have to realize how important the protocol security layer is, and for it to be. This is why Bitcoin is so valuable, and this is why Bitcoin moves so slow when it comes to things like scaling and updates. People are like, why doesn't Bitcoin just update so fast? Well, because the Bitcoin blockchain is probably one of the most valuable, if not the most important and valuable inventions of our entire lifetimes and our parents' lifetimes. It can liberate us from tyranny and centralized corruption and these kinds of things. So it's very important. It can't have bugs that create vulnerabilities for hackers to exploit. If the Bitcoin network were to be able to be hacked by moving too fast and creating code and implementing it without having years of testing that code out and looking for vulnerabilities and bugs, we could lose the Bitcoin blockchain, and that would be a tragedy. But you have these smaller forks like Ethereum Classic, Bitcoin Cash, Bitcoin SV. They don't have a fraction of the hash power or a fraction of the security because of all of the, like the Ethereum Classic was a small chain with very little hash power. And it only took, $192,000 to pull off the attack, which made the guy $5 million. But the ironic thing about this is that Ethereum Classic is now considering rolling back because of the hack. How ironic is that? Ethereum Classic started because they wouldn't want to roll anything back. And now that they had a 51% attack, they're like, yeah, maybe we should roll it back. Okay, I have said before that there's going to be trials, and there's going to be trials and tribulations. There's going to be pushback. There's going to be things that we have to overcome as Bitcoin is so unstoppable. And because us as entrepreneurs and enthusiasts, we move way faster than regulation does, which is a good thing. Regulators will react and make irrational judgments. And when central banks and things like that really realize that they're losing power completely to this decentralized network, they will lash out and fight us. And this is just something that happened in Germany. The FCA shuts down Bitcoin ATMs, right? So Bitcoin ATMs have been around for a long time. And now that banks are getting involved, they're like, wait, hey, hold on. You can't do that. You're not a bank, right? So Germany's financial conduct regulator, BaFin, has closed the operations in their country of one of the biggest Bitcoin ATM provider. This is ridiculous. To have this license, BaFin now requires the responsible managing director to have worked in a management position in finance for several years. Why do you need to set up a computer that can send, like, deposit and withdraw fiat and then spit you out a digital QR code for you to deposit or send Bitcoin to? Why do you need years of experience working in a management position? You don't. It's a computer that takes Bitcoin and buys and sells Bitcoin. It is such a ridiculous thing to even, like, how dumb is that? That you need, why does anybody that runs a Bitcoin ATM need a management position in a financial institution for several years? Why? It's such a dumb, like that is just the dumbest thing I've ever heard. Just tell them, if anything, just you can't use ATMs because we're going to make people go through banks because we want banks to have all the money. We don't want the individual people to have any money and have a business, for God's sake. But come on, this is just silly. But also, what I would see, look how cool some of these ATMs are. Look at this one, it's dope. And look at this BP gas station down here. Bitcoin ATM here. How cool is that? Yeah. So I don't know, like, they're just dumb. So more signs of people going into Bitcoin as a hedge against inflation, right? So U.S. public company is moving $250 million into Bitcoin, gold to protect against inflation. An American public company is choosing alternative assets like Bitcoin and gold to battle the rising threat over inflation, per announcement on August 5th. So let's talk about this company, MicroStrategy, and blah, blah, blah. They had a conference call with some of their investors, and he said some things and blah, 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 that he was going to put $245 million into this thing and blah, blah, blah. So he added, and here comes the part for crypto fanatics. The capital allocation strategy under which the firm plans to return up to $250 million to our shareholders over the next 12 months will contain digital assets like Bitcoin. In addition, we will seek to invest up to another $250 million over the next 12 months in one or more alternative investments or assets, which may include stocks, bonds, commodities such as gold, digital assets such as Bitcoin or other asset types. Probably going to buy Bitcoin and Ethereum. Why would you buy anything else? Like, these guys have to say stuff like may include stocks, bonds, commodities, and other digital, because they didn't because people don't, their investors and the general public doesn't really trust Bitcoin, Ethereum yet. But if these guys have been looking into it for a while and are going to put $250 million of their own assets into, like, you better believe that they're putting it in Bitcoin and maybe some in Ethereum. It's just the lowest risk, the highest reward possibility. Bitcoin showing strength. In the same call, MicroStrategy CEO Michael Saylor highlighted that gold, silver, and Bitcoin were showing strength before remarking that it made sense to shift our treasury assets into some investments that can't be inflated away or less likely to be inflated away. And if you didn't know, by inflated away, he means like the US dollar inflation. So as we pursue alternative investment strategies for treasury assets, we expect that will have more volatility, at least measured in US dollar terms looking forward. So it's interesting here. He says, yeah, we're going to put money in Bitcoin and it's going to be volatile. Just get used to it. He's just giving people a heads up, like don't come crying to us if it's down a little bit one day and up a little bit. And then don't trip, chocolate chip. Just expect some volatility and you're going to be okay. Trust me, it's a smart thing to do. That's what he's saying here. Next up, India. My God, make up your mind. Lord, every other day it's crypto's legal, then it's illegal, then it's legal. They poor Indian crypto exchanges. My God, these guys, it's just like, yeah, we're doing well, we're making money, woo. And then the next day it's like, no, you're banned. Like, oh man. And then like 2 months later, oh, guess what? Not banned anymore. Oh yeah, we're making money, woo. Oh, banned again? What? Like, it's been crazy. So in March, the Supreme Court of India struck down on a blanket ban on banks dealing with cryptocurrency businesses that had been imposed by RBI since July 2018. Like, the repeal led to a boom in new exchanges across the country. Like, if you didn't know, in July 2018, the RBI, which is like the Central Bank of India, they said that crypto should be illegal. It wasn't even the government. And they just kind of put out the statement saying that crypto should be illegal, and the whole country just kind of took it as a matter of fact. And then like, I don't know what, like 4 months ago, the government says, no, we didn't say that. No, crypto's legal. No, we didn't say it. No, that was RBI. We didn't say it wasn't illegal. No, that's all good. And then here you go again. No, maybe we should have illegal. Like, make up your mind, figure things out, please. Like, this is ridiculous. And you really just keep your country impoverished. Get with the times. Like, look what everybody else is doing. For a reason. Get with it. You're getting left behind. So basically what this says down here is that sales just went and boomed ever since the ban was lifted. 47% growth in Q1 2020. RazorX also recorded month-over-month growth of 80%. Basically, Indians were just sitting around afraid to death of COVID and just sitting there trading and being like, shit, our Indian rupee is probably not going to do too well. Like, since our economy is getting blown out, maybe we should put some money in Bitcoin. Hell, we can trade on Bitcoin exchanges. Now let's do it. A growing number of investors have found refuge in virtual currencies as traditional assets have taken a beating over worries about the health of the economy battered by the coronavirus outbreak. This is going on across the globe. Like, everywhere. The whole economy across the whole world is effed. Right? And everyone is now printing money, all the central banks. And therefore, all the fiat is inflating. So if you want to store your asset in something, why don't you put in something that's deflationary that's going to increase in value over time or spending power? How about that idea? All right, I just want to show you this real quick because you need to be careful, right? So I know DeFi is hot. I've been talking about it. I've been buying some stuff, but be careful when using something like Uniswap. These smart contracts and all of the algorithms, and this is so new. And you can't just put all your assets in there and expect it's going to be safe. It's basically running in a public beta right now. It's not like this thing has been battle tested for a long time. There's still going to be bugs and vulnerabilities, and people are learning and looking how to exploit that all the time. Right? So just so you know, here there's $370,000 stolen in a DeFi exploit from Open. And basically down here, just people are pissed. Blah, 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 money loss, blah, 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 blah. I report to SEC and FINRA if I lose money. Hello. Dude, like, don't come bitching if your money gets, like, this is risk that you have to be willing to take. I'm telling you this because you need to be extremely careful when using a new technology that is like Uniswap. You just don't know. Okay, and last up, I wanted to share a project called IDEX. You may have heard of it before if you've been around in space for a while, but what happened, I talked to Alex, the founder of IDEX. I talked to him like a year ago when he started doing this fundraise, and he was doing it for quite some time, just like I have been during COVID and these kind of things. And I guess now that DeFi has been skyrocketing, he was able to close out his round. So IDEX 2.0 is launching. They have a token over here. Check it out. It's a low market cap, 34 million. And now that DeFi is booming, the cool thing about IDEX is it's a decentralized hybrid centralized exchange where the order book is centralized. So you have speed and high throughput and things like that. However, the users can keep their own custody of their own assets. Remember that saying, not your keys, not your crypto? On IDEX, you can. So it has kind of the best of both worlds. It functions and feels very much like an efficient, centralized exchange. However, you don't have to worry about your assets being hacked, right? Because you can keep them in your ledger or Trezor or whatever and just kind of plug that in when you're ready to trade. And then when you're done trading, pop, just pull it out and your funds are safe and they're yours again. So when I talked to Alex before of IDEX, he said their success was kind of their limitations, because operating as a decentralized exchange, they were limited by the capacity of Ethereum. And as we know, something like 7 transactions a second or 12 transactions a second, whatever Ethereum does, is not nearly enough for a trading platform. So as they grew, they were actually congesting the network, which was causing a lot of problems with the exchange. So that's why the past year and a half or something, they've been working on building a more efficient version that's a hybrid model, not straight decentralized, but partially centralized and then so kind of best of both worlds. So I think that this has a lot of potential, and it hasn't really taken off yet with the news. I mean, it has gone off a bit, but like consistently, but I think there's still a lot of room to grow. This is still a fairly low market cap, $35 million. It can get up into the billions, which would be huge gains. All right, you guys, thank you so much for tuning in. Appreciate it. Hope you enjoyed. I will talk to you guys soon. Bye-bye.